So Federal Bank was the first bank to declare results in Q1 FY24, much different from previous quarters, where HDFC Bank really kickstarts earnings. So let's start off with the first number. 1919 crore is where the NII number has come, which is a 20% year-over-year growth that Federal Bank has clocked. Quite healthy, but when I'm looking at the overall context, not healthy enough. Essentially, the net interest income is nothing but the interest income that the bank earns less the debt obligations, the interest obligations that the bank has towards the debt it has on its balance sheet. So the difference of that is what it essentially calls net interest income, and that number has actually gone up by 20%. Now that is largely quantified by the net interest margin, and the net interest margin as committed by the bank was supposed to be roughly in the 3.3% range, whereas it's come in at 3.15%. So the expectation was that the NII would come close to around the 2000 crore mark. It's come in at 1919 crore, which is roughly 5% off. And when you're looking at the overall context of the net interest margins, therefore they've shrunk by almost 0.16%. So from that 3.31% mark in Q4 of FY23, in any case that was a slightly lower number than what was projected in Q4 of FY23. It's come down even further to 3.15%, and that's really what has led to a bit of a knock on the stock. So that's one of the factors that's led to the knock on the stock. Quickly rolling the numbers forward, you saw operating profit grow very healthily. It grew 34% year over year. 1302 crore is that number. Sequentially, it wasn't as good though. You're also therefore looking at operating profit slightly lower because net interest income was lower. Your top line was lower, and hence operating profit was impacted. Let's look at the provisioning. The provisioning has come in at roughly 155 crore. That number was expected to be around the 180 crore mark, so 155 crore definitely a plus. Let's also look at PAT. Therefore, PAT has come in at roughly 850 crore. We were projecting a PAT of roughly 900 crore. So there is that difference of around 50 odd crore. But PAT, not the most important metric for banks, but that's broadly where the miss lies on the bottom line as well as on the net interest income, which has led to a little bit of a miss on the bottom line. Let's also look at the GNPA number. Now this is a critical one. Your gross NPA absolute value has actually expanded by 6% on a sequential basis. That's one of the largest expansions we've seen from Federal Bank in a long time. So that's one particular number to note down. Essentially what Federal Bank is saying is slippages are high. The slippage number has come in at almost 500 crore. The number last quarter in Q4 of FY23 was 450 crore. So that number also on the higher side has actually gone up. So higher number of slippages has actually gone even more higher in Q1 of FY24, and that is also one of the metrics of asset quality, which is what is really impacting, which is the second impact which the stock has seen post results today. So down roughly 5 odd percent due to these two metrics. One is your net interest income, which hasn't hit its target, and second is the asset quality has come in slightly lower. They've had to, they've seen some slippages from the restructured book that has come through, and that is what is impacting the stock price as well. Let's also listen in on some of the commentary that's come through. In Q2, we spoke with the management. In Q2, the management expects margins to go up. So net interest income will hopefully unwind in Q2 and over Q3 and Q4, and it will make up for the slightly lower NII number in this quarter. That's what they are suggesting. They're also saying that cost of deposits, which currently are at a high, you would know that your savings account and your current account as well as your fixed deposits are now earning you more interest, and therefore the cost for the bank has gone up. They're expecting that to either remain flat or go slightly lower. That's what the bank has suggested. Now that's important commentary because that will mean that your net interest income will increase due to that lower expense from the bank, and your net interest margins in consequence will also go up slightly. So that's a positive. With regard to two more pieces of key information. One is that they're looking at a QIP, which is they're going to do a private placement of equity shares to institutions. Now, of course, this has been in the works for a while. We did ask the management as to what the management is expecting or what can we expect from the QIP. Well, no real replies, but what they suggested is we have been upfront and clean with regard to the disclosures we're making, and therefore the QIP they are hoping will sail through. That's broadly, in essence, the expectation. Let's also look at the growth numbers. That's the last lever of it. Advances and deposits both have grown extremely well for the bank, so that's one big plus. 21% growth on the advances front, 5% sequentially in Q1. Now, Q1 generally is a seasonally weak quarter, so for a bank to grow at 5% sequentially in Q1, really commendable. So that's a big plus. The other piece is the deposits. Deposits right now are a subject matter of very high competition within banks, because advances growth is largely coming through, but deposits, to give out advances, you need deposits, right? So deposit growth is really where the key challenge currently for most smaller and mid-cap banks is, and that Federal Bank has done very, very well. 4% up sequentially on a quarter-on-quarter basis, 4%, 21% both advances as well as deposits on a year-on-year basis. So largely it's a mixed bag, but today's disappointment is largely on the back of net interest income and margins, and of course that slippages number, which was slightly elevated, and therefore as a consequence asset quality, NPAs, all of that was also in focus.